Good afternoon, traders. This is Austin. Just want to make a quick video about what I'm seeing, what I'm looking at. I have 3 open positions. I have 2 in the Kiwi dollar pair, and I have 1 in the Australian dollar pair. Both are long positions going into the Reserve Bank of Australia decision later tonight. I believe 9:30 Eastern time, that is. So I just want to tell you why I'm long. And I'm just going to give you some pointers about how I pull my entries and what I'm looking for as far as managing these trades. I just want to take a peek at the New Zealand dollar first because I did open this one first. We tested, you see we have this rising trend wall, okay? The rising trend wall that started from the end of June, and now we're interacting with it now. It seems like we stalled. We came down, tested. I actually got my first entry on this candle right here. Okay. I got long on this candle right here after the stochastic cross. Original stop was below the lows of these candles right here. And I just simply pulled the long trigger. And you see we got a quick rally. And then we got knocked back down because of that the U.S. Michigan survey. So that caused some dollar buying, and we saw a quick sell-off. And now we're back testing these levels again, and now we seem to be holding. We have that, like I said, that rising trend wall. The 38.2 fib of this move up from the end of July, causing confluence right in that it already happened. Caused confluence right in there, right in that area right there. So now we can see it interacted with this X marks the spot area, and it held once again. So now we're testing the 4-hour 50 EMA, but nonetheless, I'm still buying that support, this rising trend wall. I've been able to decrease my risk on that first trade. Remember, I got in on this candle right here after the stochastic cross. Original stop was just below these levels. I was able to move my stop nearly 75% of that. So now I decreased my risk and kept my same reward. Nonetheless, I'm looking for 3-to-1 ratio, 3-to-1 risk to reward. On my first entry, that would be around, I believe, what was it, about 110 pips. 110 pips. And on my second entry, it's going to be 60 pips. So I entered my second position on the 1 hour. Right after we had the sell-off, tested these levels. I actually opened this on Friday, as a matter of fact. Tested these levels. X marks the spot. Stochastic cross. Coming from oversold positions back above 20. Pull the trigger. Stop is located in the same spot as my original trade. Only risking 20 pips. And judging by how what price action decides to do, who knows, if I'm able to take that second position to the same amount as my first position, that 110 pip mark, then I'll take that. That will only bring me, what, 5 to 1? Can't beat that. So that's where I'm at right now. That's my New Zealand dollar position. Obviously, it can go against me at any time. Obviously, I can lose this trade without a doubt. But regardless of the fact, I have a nice risk to reward ratio. Decrease my risk, same reward. So if I lose this trade, I barely lost anything. It doesn't matter to me. I'm able to take that emotionally, which will only make me be able to pull the trigger on the next trade confidently to have the opportunity to game some pips. That's all the Forex game is about. Australian dollar trade, similar to the Kiwi dollar trade. You have this rising trend wall. We interacted it. We got the bounce. 4-hour stochastic cross. Entered my position and actually took it to the low of this candle right here. Around 35 pips. We'll look at it at 2-to-1. Now that I'm looking at it right now, here's how I would look at my profit target. Looking for nothing less than 2-to-1, strictly 2-to-1 risk reward ratio before I take anything off. I'm going to take the fib from this move down, and then we'll see what that tells me. I want to see what that tells me. Who knows? Obviously, if it would make a run up, there's some confluence at the 50 fib. But nonetheless, 35 pip stop, right? Looking for 70, right in the middle of this 50 and 61 fib levels. If I get a break above, I'll take it to the top. So we see what happens. We'll play it out, but always nothing less than 2-to-1 before I do anything to that trade, before I take any profits off. Must be 2-to-1. Then I'll pull out some fibs, I'll draw some lines, and I'll look at a more comfortable destination to try to rack up some more pips. But nonetheless, the ratio is always 2-to-1. So that's what I'm looking at right now. We got the Reserve Bank of Australian minutes tonight, 9:30 Eastern time, I believe. So there's going to be some volatility. Nonetheless, I got some tight stops, some low risk on the table, and some high probability. I won't say high probability, but highly profitable favors in my favor. My odds in my favor. So we see what happens, and obviously I can lose this at any point in time. Doesn't matter. I like how I'm trading it right now, and that's what I'm looking at, and that's what we're gonna work with. So see you guys later. Happy trading, and God bless.